Have you ever imagined yourself being your own bank, having full control over your financial resources, and maximizing every investment opportunity? Well, that's exactly what we're going to talk about in this video. I'll guide you through a path where you'll discover how to become the master of your own financial destiny, using a powerful and often underestimated tool, whole life insurance. Get ready to uncover how this strategy can not only ensure financial security, but also open doors to long-term wealth building. I'll reveal the secrets behind the Big 5 strategies and how you can use this tool to create a solid and enduring legacy. So let's get started. Most people, when they think of life insurance, tend to focus primarily on the death benefit, i.e., the amount beneficiaries will receive if the insured passes away while the insurance is active. But there's another key component of life insurance that is often overlooked: loans against the cash value of the policy. You're borrowing from yourself, not from a bank. While life insurance may seem like just another expense at first glance, the truth is, it can be a powerful wealth-building tool over time. When you invest in an IRA or 401k, you're actually tying up your money until around age 59. This makes it useless for you now. In that sense, life insurance is far superior to an IRA or 401k. With a life insurance policy, you can allow the policy's interest to accumulate and compound, much like in an IRA or 401k. But with life insurance, the interest is guaranteed, which is not the case with your IRA or 401k. And the best part is, you can take a loan against a life insurance policy to purchase an asset that gives you more cash flow, like a real estate investment or acquiring a business. Try doing that with your IRA or 401k. Sure, you can withdraw from your IRA or 401k, but they penalize you for it, not with life insurance. This is how you can become your own bank. Instead of giving your money to someone else, like an IRA or 401k, you're literally giving the money to yourself. You can use your policy to finance major purchases, such as an investment property or educational expenses, without touching your savings or other investments. In summary, while life insurance may initially seem like just another expense, it's actually an incredibly valuable asset to support both short and long-term wealth-building goals. Whole or permanent life insurance policies enjoy what I like to call the Big 5. Guaranteed return, dividend accumulation, tax-free growth, policy loans, and death benefit. But do you know what guaranteed returns are? Unlike more traditional investments like stocks or bonds, whole life insurance policies offer contractually guaranteed returns each year, with the rate determined by the insurer, perhaps around 3%. These guaranteed returns not only provide a stable source of income, but also give investors a greater sense of security and peace of mind. Additionally, many companies will offer things like cash bonuses or interest-free loans to their policyholders at various milestones. These additional benefits can provide value beyond the cost of the policy itself. Moving on to our list, what is dividend accumulation? The cash value of your policy also has the ability to accumulate dividends over time. As your policy matures, the dividend rate may be around 2 to 3%. These dividends can be used for additional benefits, such as cash withdrawals or premium refunds that reduce the cost of your insurance. They can also be used to purchase more coverage or help fund other long-term goals through various investment vehicles, giving you full control over the growth and management of your policy. This is how you become your own bank. Next, the third of the 5 major is tax-free growth. Common investments are considered income, so they're taxed as you earn them. For example, if you buy and sell a stock or cryptocurrency at a profit, you pay tax on that. One of the most significant benefits of a whole life insurance policy is that it allows you to accumulate returns without paying taxes on those gains. This means your money has even more opportunities to grow over time. Even better than that is number 4 of the Big 5, policy loans. Once you've accumulated a considerable amount of cash value, you have several options, and options are good to have. You can simply surrender the policy to cash out the full amount or partially cash out, keeping your life coverage and still enjoying some cash value. However, there's another option that most people forget. They can take loans against the cash value. That way, you're still covered by the death benefit and can use the cash value to finance an important purchase. The best part is that the interest rates are usually much lower if you borrow from your policy instead of borrowing from a bank. Lastly, the last of the big five is the death benefit. It's the amount of money the insurer agrees to pay to your loved ones upon your death. That's what most people think of when they think of life insurance. But it's actually the last reason to buy life insurance. That being said, the death benefit acts as a financial safety net in any unexpected tragedy or tragic event, providing much-needed peace of mind for families and loved ones. But as I said, the death benefit is the last reason to buy life insurance. The main reason for you to become your own bank is that you see the value of a whole life insurance policy increase over time as the cash value of the policy grows. However, this growth is not fast enough to cover inflation and be considered a wealth-building vehicle on its own. To maximize the effectiveness of a whole life insurance policy in wealth building, you need to understand how to use it as a financial tool. At its core, this type of policy is designed to offer stability and protection for your family, but it can also be an incredibly valuable asset to increase your overall net worth. One of the most effective strategies for using a whole life insurance policy in wealth creation is to borrow against your policy and reinvest the funds in another revenue-generating asset. You can borrow money from your policy, your own bank, to purchase real estate, for example. You're much better off borrowing from your own bank than from Wells Fargo or JP Morgan. When it comes to leveraging an investment opportunity like real estate, there are many different options out there. The traditional route is to beg the bank or another financial institution for a loan, but the superior option is to borrow against the cash value of your life insurance policy. This alternative has several excellent benefits, including a much lower interest rate than you would find with most other lenders. Additionally, borrowing against your policy doesn't require credit checks and allows you to access your money tax-free. Perhaps best of all, however, is the fact that there are no mandatory monthly payments. You only need to make payments on the amount you use. This means you can keep your money invested in another asset for as long as you want. With whole life insurance, you have quick access to the cash value, whether by surrendering the policy or borrowing against it, and you can use that money however you see fit. Your cash value is always there when you need it, with one of the best rates in the market. So, if flexibility and control over your finances are important to you, then whole life insurance may be the perfect investment choice. After all, do you want to borrow money from Wells Fargo or JP Morgan, or from your own bank? Today's video was to teach you an effective strategy on how to use your time and money more successfully to build wealth. But I truly believe that if you want to achieve true wealth in your life, you need to understand all the fundamentals of money and investments. So I recommend that you subscribe to our channel to learn more every day. Thank you for watching. See you in the next video. Take care.